Oracle is going absolutely bananas. Wall Street is apparently shocked by this earnings call and what they said, as Oracle jumped $230 billion in one day. That's total market cap gain, $230 billion. That's bigger than your favorite fast food restaurant in McDonald's, some oil company in China, missile manufacturer Raytheon, your favorite princess storyteller Walt Disney. This was a massive move. So massive, in fact, it's the third biggest single day move of all time, behind our good old friends over at Nvidia. You can imagine Oracle's line right here, 230 billion. And when you're moving like that, when you're moving like Nvidia, something's got to be going on. Something crazy's got to be happening with the company. So let's take a look. What happened? Why is everybody so excited? Well, it came down to two things that were said during the earnings call. One of them being that Oracle now sees $144 billion in cloud infrastructure revenue in the 2030 fiscal year, up from $10.3 billion in 2025. I mean, we're talking about a greater than 14x in revenue in about 5 years. This is no joke. This is absolutely absurd. And this is a little interesting because usually when a company goes into earnings, they try to project, a year into the future, maybe 2 years at max, because it's so hard to have visibility into the future like that. You never know what technologies are going to change, what innovations are on the horizon. So for a company like Oracle to come out and confidently say that they are going to 14x their revenue in a single division of cloud infrastructure by 2030 is quite ridiculous, quite insane. And we can see their projections are pretty optimistic. I mean, we're talking about basically an 80% year-over-year gain from 2025 to 2026. So 80% here, and basically another 80% gain here, and then a massive leap, more than 100%, a 2x and greater gain from 2027 to 2028. I think you get the point. It's a lot of money that they're projecting. And just in case you were curious, and for a comparison to make this more comprehensible, what Oracle Cloud just said, roughly 10, 11 billion to 144 billion in 5 years, that comes out to a 70.5% compound annual growth rate. If you were to guess what this CAGR is right down here, 103%, that is our good friends over at Nvidia. Nvidia data center revenue from 23 to 27. Now, again, if you're anywhere on the playing field of Nvidia growing at a rate like that, and I know 100% is much, much greater than 70% on a compounded annualized basis, but you have to understand just how absurd this number is. Oracle is projecting revenues to grow at roughly a 70% clip. But this was just the first part of that massive optimism, that explosion of over $230 billion in market cap in one day. The second part was also during their earnings, which had nothing to do with the earnings themselves, but another future projection. And that is in regards to, what else would you expect? Capital expenditures, capex. Oracle is currently sitting at $8.5 billion in capex just this year, compared to $2.3 billion a year earlier. So I mean, we're talking about roughly a 4x in capex expenditure from 2024 last year to this year, 2025. And next, here was the bombshell. Here was the big news that got everybody all excited, all very, very happy and pleased. It was this line right here. Oracle expects to spend $35 billion in 2026. That comes as a massive revision to what they previously projected of $25 billion. We're talking about $8.5 billion to $35, a greater than 4x. Oracle is not just increasing at a crazy growth rate, they're accelerating from a 4x to a greater than 4x from 25 to 26. And that was a great surprise, as they previously were sitting around 25 billion. Everybody throws around capex. What are they actually spending money on? What could they possibly be spending 35 billion kahunas on? That's a shit ton of cash, a ton of money to be throwing around. Well, they're spending it on AI superclusters. Of course, they have to make it sound super technical, super important, that headline buzz phrase that's going to grab your eyes and get you to read whatever they're talking about. AI superclusters, let's simplify it in layman's terms. This just means shitting out a ton of money to your good friends over at NVIDIA. Well, mostly NVIDIA, probably like 90% NVIDIA, and a little bit to AMD as well. Share the love, help the poor out down here. They're buying a ton of GPUs to build out these AI superclusters. In other words, just a fancy name for a supercomputer or a bunch of super powerful and capable GPUs. The computing power for other companies to use in the form of AI, large language model training, inferencing. You get the point. Basically an AI hub, right? A place for companies to run, train, use their not LMMs, they're LLMs, they're large language models. They buy a ton of chips from NVIDIA and AMD. They rig up all these chips together. They provide this insane amount of computing power and rent out the space, rent out the compute to companies who need it to train AI models on and do whatever else they need to do. It's compute that you can rent over the cloud. Now again, this could be a whole nother video, and we talked about this in great detail in a video I released a few weeks ago talking about OpenAI spending and how it's kind of a house of cards, and it really depends on investors to keep feeding them money to make up for the massive and growing amount of losses that they have. But the whole idea today, we're in this AI arms race, right? Nobody's actually seeing the returns on AI except a few outlier companies like Palantir. But the idea is if you don't invest in AI, then you're going to fall too far behind. You're not going to have the same capability, the same technology, the same innovation that all these big tech companies have. And therefore, you're kind of forced, right? You have a forced hand. And we're seeing companies all over the place right now transition from what were shitty crypto mining companies to now just renting out the GPUs that they bought originally to mine crypto to now be rentable compute that these AI companies can use to train their AI models and perform whatever AI workloads that they need to on. Again, the overarching theme is the returns on these investments are not in the room with us, at least yet. However, the absurd capex investment that is happening is making investors really, really happy. As we see the stock market near all-time highs or at all-time highs, we see NVIDIA doing really well. We see all the chip providers doing well. We see the chip designers doing well. We see the AI compute companies doing well in a sector that I think is still being slept on, although it's doing well. We'll get to at the end of the video. I talked about it last video. But honestly, at this point, it's just kind of funny that all these tech companies are promising this absurd amount of money, hundreds of billions of dollars to invest in America over the coming years in capex, in other words, in AI compute. And it just sounds like they don't really know if it's worth it. They don't really know the number that they should be saying. Let's take a quick look.
How much are you spending, would you say, over the next few years?
I don't know, at least $600 billion through 28.
600 billion.
600 billion.
$100 billion. In the next 2 years, it's $250 billion.
It's around $75 to $80 billion.
I mean, this is great. We're throwing around numbers that are absolutely absurd. You heard $600 billion. That's bigger than basically 99.9% of all companies that exist on this planet. Bigger than probably 95% of the country's GDPs that exist on this planet. So we're talking about absurd amounts of money that's being thrown around on capex AI investment right now. Again, Oracle's move of $230 billion was so massive, it puts it ahead of some massive companies. Now the 12th most valuable company in the world, 10th in the S&P 500. But after all of this, after all of what we just talked about, you know what they reported for earnings? They missed on earnings per share. They missed on revenue. Now, what red flags does this bring up, if there are any red flags? Again, it seems like all sunshine and butterflies and rainbows when we hear the CEOs talk, when we hear their projections that go 5-6 years into the future, when usually we only hear 1 to 2 years. What kinds of problems could this present? Well, there's two main problems that we have to talk about, and one is demand. Now, why is demand a problem? Because it's funny, right? You hear demand, and demand being so high is almost always a good thing. Unfortunately, the problem that might hurt Oracle is their is so much demand, at least the demand that they're projecting, $144 billion in cloud infrastructure by 2030. How are they going to be able to keep up? How are they going to be able to get their hands on enough NVIDIA chips? And this is actually where AMD might have that sneaky back door, right? Back into the game, because even though they're not close to the performance that NVIDIA chips can pull off, some companies like Oracle may not have a choice if they want to fulfill this demand, although the performance of the chips may be slower, and hence they're not getting the best value, the best cost per unit of work out of these chips. It might still be worth it to spend a ton of money on AMD chips versus NVIDIA chips that are already booked out 75,000 years into the future, as we know. The second problem, number 2, is capital. So you'd think, with all this demand, with all this projected revenue, how in the God's name is Oracle going to buy all of these NVIDIA chips? These chips are not cheap, as you might have guessed. And as they continue to pull the Apple business cycle, right? You rename the iPhone from iPhone 9 to iPhone 10, you throw another camera on there, or you don't even do that, you just add some more memory, some more processing power, and people are going to spend more money on it. They're going to upgrade their iPhone. Same thing with NVIDIA. As NVIDIA continues to release these new chips that can perform more and more operations per second, especially with the Vera Rubin family of chips right around the corner, you're going to have to spend, in Oracle's case, more and more money to keep up with this upgrade cycle that's really non-negotiable, as we talked about. If you don't upgrade, if you don't spend the money, then you're gonna fall behind and you're not gonna be able to catch up to these big tech companies that are buying NVIDIA chips like crazy. How are they gonna get all this money? That remains to be seen, and you know what both of these points lend themselves well to? That is execution. Execution. At the end of the day, execution is the most important thing. You can say all the different things you want. You can project all the different numbers. You can project that your company will make hundreds of billions of dollars in AI cloud infrastructure, but it all doesn't matter unless you can execute. Projections are just projections. At the end of the day, it comes down to the company and their decision makers. Can they get it done? Now, what does this remind you of? Well, it might be a spoiler, but it's on screen here. Elon Musk and Tesla. It's undeniable. The proof is there, and he has executed with Tesla. But if you followed Elon, if you followed Tesla over the years, there's no doubt that Elon tends to be a little overly optimistic when it comes to making these predictions that go far into the future, let's say months to a couple years to 5-10 years. And with that much optimism, it's hard to be accurate all the time. In fact, Elon Musk is not very accurate. So again, what we just talked about with Oracle is they need to execute. Elon Musk has obviously executed well with Tesla and his promise to deliver robo-taxi services across the country, eventually across the world, to deliver Optimus robots to the house of every single American and eventually worldwide. These are lofty promises, but he has a track record of success, of proving himself, of executing, and because he has built this incredibly strong track record that is undeniable, he has led investors to believe that Tesla just deserves a higher valuation, a higher premium than basically all its peers. Tesla has consistently stayed above anywhere from 100 to 1,000 PE ratio. Now, does Tesla deserve that PE ratio? Fundamentally, no, of course not. But subjectively, why investors have decided that Tesla does deserve this premium is because of Elon's track record. The things that he says, the innovations that he promises to bring to society, the problems that he hopes to solve, they are so powerful and so profound that investors have just accepted it. At this point, Elon and Tesla are just worth more than their technological peers. It doesn't matter what they're doing. It doesn't matter if they have more results than Tesla does, because Elon has goals and he has a track record of achieving those goals, even if his predictions are typically way too soon and usually off by a year, 2 years, or whatever. It doesn't matter. Elon and Tesla execute. Now, that could be a potential red flag or a problem with Oracle. Should they have the right to speak like Tesla does, speak years into the future when you're very uncertain and unsure of things to come, things to change, innovations, technologies that will change the landscape of the world, should you make these extremely optimistic promises that you're going to be able to 14x cloud infrastructure revenue by 2030? If they're going to put that out there, they're extremely confident about it, and there's no doubt that AI investment is here and here to stay. Even with that assuredness, even with Oracle being confident, this is just something to look out for. At the end of the day, all that matters is execution, not the lofty numbers, not the crazy headlines, not the technical jargon that seems really fancy and gets investors really, really happy. And now this is where we can start to talk about, well, will they execute? And the answer is, I'm not really sure. Because yes, they have a strong presence in the cloud market, but we can see the big tech companies that really own this market, the cloud market overall, are AWS, Amazon, Azure, Microsoft, Google Cloud, Google. And you can see Oracle here at a measly 3%. Now, what does that mean, and why could that be a problem for Oracle? Well, it seems like that companies would rather rely on AWS, Azure, and Google, namely Amazon, Microsoft, and Google, rather than Oracle. So they're kind of like the fourth choice for potential customers, and that could be okay. Like we talked about with AMD, AMD is going to benefit from the demand that NVIDIA just can't handle and can't sell to. Now, Oracle seems to be in that same boat as well. Will they take market share? Will they take a position from, say, a Google, from a Microsoft, from an Amazon, as they specialize in this more AI-specific cloud market infrastructure? They definitely could. That's completely possible. It just seems right now that companies would rather rely on your three mega cap tech companies. And again, what we're talking about here is inherently risky. Obviously, with any investment that involves a lot of risk, there's also a lot of upside, but I think there is a way around this. I mentioned this very briefly at the beginning of the video. I think there's a way to avoid or bypass a lot of this risk for slightly lower but more consistent returns, and that is energy. Now, no matter what happens, no matter who wins the cloud race, no matter who wins the GPU race, no matter who wins the AI software race, you know what they all need, no matter what? It's energy. And we talked about this in my last video. AI, large language model data center share of total energy sales is exploding, and it's projected to keep on growing, keep using more and more of the world's electricity. Electricity demand by data centers alone by 2030 is expected to be the fourth largest country, if it was a country, in power consumption. And large tech companies are foaming in the mouth to get this little phrase right here on all their products, on all their websites, on all their news headlines: carbon neutral. So what does that mean? Well, they have to rely on nuclear energy. The answer to clean energy, at least for now, this may change with time, but nuclear fission, conventional nuclear power plants is the way that tech companies are answering the bill of cleaner energy usage. In either case, I've talked about these companies in the past. I've been talking about them for a few months now, and they've performed exceptionally well. Constellation, Vistra in particular, some of the energy providers that have the largest nuclear generation capacity right now. I think these numbers are only going to grow, and I think these companies are going to continue to outperform the energy market and probably a lot of different industries. So again, we talked about a lot here. Oracle, this is a very interesting situation. Basically just buying up all of the GPU AI compute that they can from NVIDIA and AMD, putting it all together and renting out that space to software companies or other companies that want to train their large language models, that want to host their large language models. Oracle is doing exceptionally well for themselves, and their CEO's net worth jumped something like $100 billion on the third biggest ever single day market cap move in all-time stock market history. So if these numbers come to fruition, if these dreams come to a reality, Oracle should realistically be a $2 trillion company. With these projections, if they come to fruition, they should be worth much, much more than they are right now. Again, it comes down to execution. Yet the investment into building out AI infrastructure is having companies foaming at the mouth, throwing billions and billions and billions of dollars into capex spending each and every year. It's growing and it's accelerating. Do you believe in the Oracle story? I mean, if they can execute, then this stock is a beast. a mega cap tech stock in the future. All right, that's it for me. I hope you enjoyed the video. If you made it this far, consider subscribing as well. I'll see you in the next one. Peace.